Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial conditions.
Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the Chicago Board of Trade. Today is Wednesday, January 21st. A lot of markets moving, fairly quiet in the grain markets. Corn, wheat continue to be a little bit disappointing. Started the morning on firm ground, but then gave that up when we got more participation. The leader today in the grain market is what we're going to focus on. That's the soybean market. And a lot of that strength came in the early morning, overnight session. We got some headlines from Secretary Scott Bessent that he had spoke with the Chinese Vice Premier and talked about the good conversations that they had and are going to continue to have those conversations going forward. So that sparked some optimism in the soybean market. And as you can see here, a nice reversal back to the upside following yesterday's reversal, which rejected higher prices. So we're right back towards the top end of this range that we've outlined in the last few reports. This is going to be a big hurdle, 1070, give or take. You've also got the 200-day moving average. If we can get out above there, then I think you could make a run back towards the 1080s, which if you recall from previous videos, this has been a big level, not just recently, but really going back to last year. So a big hurdle here in the back half of the week. We'll see if we can't overcome that and maybe spur some additional technical momentum into the end of the week and go from there. But all in all, very constructive price action, especially after yesterday's disappointing attempt at a rally. Now, other markets on the move. We got some news this afternoon with regards to Greenland. Apparently, there is framework for a deal to acquire Greenland and other Arctic nations. So that's was certainly headline worthy, but within that Truth Social post from President Trump, really the market moving thing was the fact that the tariffs that were going to be implemented on February 1st are now postponed. So you saw a lot of these markets react accordingly. Here we've got the S&P, nice reversal, saved by the skin of our teeth on the technical front. We're just flirting with yesterday's lows, and that 100-day moving average were able to rebound nicely back towards the top end of the range from yesterday, as well as the 20-day moving average, and filling that gap. I think the next couple sessions can be very telling on what this market wants to do going forward. But as you can imagine, tariffs on pause, that is a risk on trade. And when you're talking about a risk on trade in those equity markets, you go look at those precious metal markets. And as you'd guess, they got beat up pretty good on this news. Here we have the silver chart. Really not a whole lot of technical damage, though. It feels like a big down day, but really just giving a lot of yesterday's gains back. And then for the gold market, up very sharply this morning. Traded into negative territory following this news, so that was about $120 off of those highs. So a lot of volatility, and I think just a reminder that there is still some risk out there. So if you have been able to capitalize on the nice move in precious metals, might not be a bad idea to look at reducing some exposure, or at least protecting the downside in case we do get more of a washout correction from these high levels and overbought levels as well. Then over on the energy side of things, crude oil continuing to shape up very nicely. We marked higher lows in yesterday's trade. Now we're trading back above the 200-day moving average. 62.50 for that March contract. That's going to be the big barrier that we want to get back out above. And I'll illustrate this on the chart. How impactful this is. So we go back here. It's really been an inflection point, breakdown point, resistance, breakout point, fluttered around here. Now we're on our way back up there. If we can get out above 62.50, I think that opens the door for additional technical momentum, maybe make a move towards $65, $70. I still think that there might be some underpriced geopolitical risk, but all in all, that chart looks really good right now, knock on wood. A break and close below the 20-day and the 50-day down here, 58 and a half and 59. That would probably be the tap out point for the bulls. And then wrapping things up, a market that we've been pretty optimistic on for the last month and a half, 2 months. Lean hog market, and started to look a little bit tired over the last couple of sessions, and I'd make the case that it looked a little bit tired today, even though we did finish higher and mark a new closing high for the move. So constructive price action, but again, it feels tired. So what we've been talking about with clients who've been on the bullish side of this over the last month and a half or 2 months, or even shorter than that, is this is a spot to probably reduce exposure. And if you're bearish this market, I think this is probably a good opportunity to look at the short side, whether that be with futures or put options or put spreads. You could even sell some futures and look at buying some calls as protection. There's a lot of ways to slice this pie, and one size is obviously not one size fits all environment. So those are a few things we're looking at here midweek. If you have any questions about any of these markets or any of these trading strategies, don't hesitate to reach out to our trade desk. We are ready, willing, and able to help. As always, remember, trading futures and options does involve substantial risk of loss and is not suitable for all investors.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including the specific material used and distributed by Blue Line Futures LLC, shall be construed as or is in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.